Hi everyone, thanks for joining us today for our Nonprofit Fundamentals video series. Adam and I today wanted to bring you a topic called Nonprofit Myth versus Fact. So we're going to go through a list of different statements and kind of discuss whether they are myth or fact for nonprofit organizations.
All right.
Yeah.
I'll start it. So April, a nonprofit should never run a deficit. Myth or fact?
Myth.
Myth.
So I think because of the revenue recognition rules, nonprofits, their bottom line, their net income or their change in net assets could very much show a deficit one year, and that doesn't necessarily mean that there are financial struggles, because multi-year awards often have to be recognized up front if they're unconditional, and so you may get a sizable award one year and you're going to spend it down over several years. I know a nonprofit of mine also, had significant reserves, and they consciously chose to spend down some of those reserves in a year, and so it did result in a deficit. But again, doesn't necessarily indicate that there are financial struggles.
I would also say with that, there could be planned deficits. That you're planning on doing different improvements within the organization, planned spending, things of that nature are good. So.
Yep, very true. Okay, next one. Every nonprofit should have at least 6 months of cash reserves on hand. Myth or fact?
I'm going to say myth,
Okay.
but I'm going to add the caveat that, 6 months is like a gold standard benchmark for nonprofits, but realistically, that's not always possible. I think it's a goal to strive to create a level of reserves. 6 months for some nonprofits may be a lot, especially when you're being funded by cost reimbursement contracts. That's really only funding your costs by its nature. So there's really not a chance to really build those reserves. So I would say myth, but with the added bonus of that should be a goal is to build a level of reserves.
Good answer.
All right, so next one. I'm going to put your auditor hat back on here. So if a nonprofit receives a clean audit, does that mean their internal controls are strong?
Myth. So an independent auditor's report is going to give you a clean opinion and state that the financials are free of material misstatement, but that doesn't necessarily mean that the internal controls don't have issues or deficiencies. It's really telling you from a numbers standpoint or from a disclosure standpoint, the financial statements are in accordance with GAAP. So the numbers could be reliable based on everything that the auditor looked at, all of the third-party support, the invoices, the testing, but it's very possible that the internal controls are lacking, where some of the review is not there, mistakes could happen, but maybe the auditor didn't find any. So, myth.
Okay.
Let's see, next one. So, myth or fact, low overhead is a sign of a well-run nonprofit.
So that is a myth. This is like a pet peeve of mine.
You like the overhead conversation.
I do. So low overhead does not mean a nonprofit is necessarily being well run or being well managed or what have you. Low overhead means typically that spending is not there for infrastructure, whether it's fundraising, whether it's back office, staff compensation, a CRM system, the IT. Typically that means that a lot's going to program or programmatic activities, and not enough is going to your supporting activities, which is essentially vital to an organization. Without that spend, and the organization is going to struggle. It won't be able to maximize their program and how efficiently and how well run the programs really are or could be. So I think, now with that said, I understand there can be too much of overhead, but I think a good balance between program and the overhead is necessary. So if the overhead is very low, I think that is an issue.
Yeah, I think it's looking at operations overall and how much is really needed for the longevity of the organization.
Yep.
Okay.
All right. So myth or fact, a nonprofit can have a profit.
Fact. A nonprofit can generate a profit. I did have organizations years ago that would ask me, is there a big concern that, we have a surplus this year? And actually, no. It's tax exempt as a status because of where your income and your revenue is coming from. But nonprofits can generate a profit, and organizations should look to generate a profit and be able to build up their reserves for when they need them. Maybe there's a funding source that contracted with you, but they're 3 months behind on payments from a government agency, because that never happens. So it's always great to build up reserves, and that profit's important.
Yeah, like April said, nonprofit is a tax status. It's not necessarily a business strategy. So I think also, a question we get a lot of times is, should we be spending more on the mission? Like, is that a bad thing that we have a profit? And I mean, that's a conversation internally, but I think overall the mindset of we're allowed to have a profit, allowed to have reserves, I think is very important for nonprofits.
Yeah. Okay, next one. Myth or fact? A nonprofit can be profitable and still run out of cash.
Fact. So this is kind of going back to the points you were making earlier about the timing recognition of revenues and expenses. So a nonprofit could have a multi-year grant, recognize it all in 1 year, but a lot of that money won't be coming for future years. That's going to show a bottom line potentially of income, but you don't have the money yet. That's all same receivables. So a lot of it has to do with timing. So when you're looking at a financial statement or looking at your own numbers, you need to understand the flow of grant dollars, how they're coming in, going out, and that's really driving your cash levels, your cash balances. The accounting gap profit doesn't necessarily match that.
And kind of like I said earlier, government grants. You could have months of receivables that haven't been paid. So that's going to drive up your receivables and cash not coming in to pay any invoices or payables or debt that's due, operations, payroll. So that is something that we've seen from time to time.
Yeah, you definitely can have a paper income, but cash loss. So that's definitely a thing.
Right.
All right, so myth or fact, using reserves is a sign that a nonprofit is struggling.
Myth. We touched a little bit on kind of cash, accrual, reserves, and liquidity. So an organization could intentionally be paying down some of the reserves, investing in the organization. So reserves being spent down is not necessarily a sign of an organization that's struggling. It could be completely intentional by the organization. Okay. A nonprofit should always accept a grant if it brings in new revenue for the organization. Myth or fact?
I think most people would say take it, but I would say myth. Just because you need to understand what strings are attached to that grant. For instance, federal funding has a lot of strings attached. Maybe that's not a road you want to go down. You also want to look at mission, besides compliance aspects to your mission. Does that grant meet your mission? Is it within your current programmatic activities? You don't want to have what's called mission creep, where you start expanding your mission and taking on all these new dollars that don't really necessarily relate to your core mission of the organization. You want the grant to fund your current programs, as I mentioned. You don't want to be expanding your programs to other areas, things that you don't have. That's going to bring in a lot of costs. So just because there's new revenues coming in, you need to see the full picture of what compliance is related to this. Does this align with our mission? And is this related to our current program, where this is going to just allow us to expand the current program instead of have to create a new one with all brand new costs?
Yep, all good points.
All right, so myth or fact, the Form 990, the tax return for nonprofit, is just a tax return, tax filing.
Myth. So because the 990 is public on a number of different websites, it can be accessed by donors, funders, employees even. So you want to kind of use it as a marketing tool. It tells the donor or the reader about the mission. It gives financial information. It also gives a lot of information about governance, if you have certain policies in place. So you really have to look at the 990 closely and make sure that it's accurately depicting what the organization does and its financial operations, because it is public and available out there. Yep. All right, myth versus fact. A balanced budget can still be a bad budget.
Fact. I don't think we've had that many facts.
More myths.
So I would say, yeah, so that's true, because you need to understand what goes in that budget, what assumptions were built in to get to that balanced number, especially when it comes to revenue. So it's very hard to really budget and predict how much in contributions you're going to bring in, how many grants you're going to bring in. So, for instance, if you're a board member, you definitely want to get an understanding there, question where that number is derived from, how realistic that number is, because a lot of times nonprofits do strive for a balanced budget, and the number that they will use to make that budget balance is that contribution line item. Mm-hmm. So it's really important to really understand what goes into those numbers to really understand if that's a good realistic budget or a bad budget. Because at the end of the day, a balanced budget that's unrealistic does not help the organization.
Mm-hmm. Yeah, you need to know whether those numbers are a goal or a stretch, or whether they're realistic.
Yep. All right.
Okay.
Last one. You get the last one.
Okay.
All right, so myth or fact, a nonprofit with strong programs can still fail because of poor financial management.
Fact. Yes.
Done. Mic drop.
Done. Fact. Yeah, so, I mean, nonprofits are often driven by mission. They have a passion that there are people that they want to help. And so they do everything they can to try to help as many people as possible. But it is, something that you'll see from time to time is if an organization is incurring expenses that are higher than they anticipated, payroll costs are going up, other costs are being driven up as well. If the revenue and the money is still not coming in to run these programs, organizations can find themselves being really financially stretched, digging into the reserves more than they anticipated. And if it's not something that management sees in the beginning, it's something that can kind of spiral out of control, and by the time you see it, it's very hard to rectify. So I know organizations kind of feel this, heavy weight on themselves to try to help as many as possible, but you do need to balance that between being financially responsible so that way the organization can really continue for a long time. There's a much greater need than there are resources. So, don't put too much pressure on yourselves, and, you help who you can, and, that way you can keep the organization in existence for a long time.
Yep, good answer.
Yep. Okay. Well,
right.
Hope you enjoyed this one.
Thank you.